Yeah, good morning. So yesterday we saw US market again moving up, uh, mainly driven by good corporate results over there. And apart from that, market is also looking at FOMC meeting, which is scheduled starting from today and will end tomorrow evening. So market is also looking at that. But today morning, if you see the Hong Kong market is down by almost around 2.5%. That is mainly because Evergrande, which was the main property company, which was struggling in last over a year in China and Hong Kong, has filed for liquidation, and that has dampened the sentiment for the property stocks in US and China, in Hong Kong and China, and various property stocks are down substantially. So this has led to decline in the Hong Kong and China market. But apart from that, the other Asian markets are also more of a sideway or flattish. And futures of the US market is also more of a flattish. So yesterday gain was there, but today morning more of a sideway market is visible in the Asian region. We yesterday we had seen a very strong move in the Indian market as well, mainly driven by Reliance, and people were expecting that there could be some announcement on demerger of the company, but nothing has come up till now. But we may not be uh, sure about what is going to happen in the coming period. But anyhow, the move was very strong, so we may see some profit booking in today's trade post that strong movement. Apart from that, if we talk about the commodities are more of a bit down, mainly driven by the China and US property stocks decline. So overall seems more of a sideway to marginal correction market in today's trade. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a positive note and we're likely to witness some positive momentum during the day. On the technical front, yesterday we have seen a very good rally into the Nifty and maintain a positive closing above 21,700, which is a very good sign on the technical. Going ahead, the first immediate resistance lies at 21,840. If it's surpassed that level on the today's closing basis, then more buying can be seen into the Nifty, which may take a Nifty towards 21,920, 22,000. Whereas on downside, as of now, we can see that the 21,640 will act as an immediate support level. If it's go below that level, then only we can witness some sort of a profit booking, which might take Nifty towards 21,540 to 21,440 levels in the time. The view is a bit positive because we are witnessing a pullback rally into the Nifty and it's respecting the support levels and going on the higher side as well. Coming towards the Bank Nifty, for today intraday purpose, the resistance is placed at 46,040. Above that level, 46,300 levels can be seen, whereas the support is placed at 45,740, 45,440 levels. Stock specific, Auropharma really looks good on the technical front. We believe that the upside 1200 levels can be seen. One can take a long position at the current market price by maintaining a stop loss of 1140. That's it from my end. I request Niro to take a call for this.
Yeah, thank you, Swati. Uh, on the derivative front, so yesterday, the options open interest showed, the jump was likely to come. Uh, there was not much open interest, but still, even now, looking at the open interest profile, still seems like, 22,000 plus can be achievable. We might just see that coming in before the budget now. We were expecting, a couple of days of consolidation, then a big jump, but this has come in early, which is great. The open interest, we've just started the expiry, so the open interest for Nifty is flat. PCR still at comfortable levels. So VIX has jumped because of the budget announcement, and it is likely to remain elevated. now for the next couple of days, and then eventually come down a little, and probably, from March onwards again start to rise. So nothing much to worry in terms of VIX. The only thing what really happens is with the high VIX, sudden selling pressures come in into the market. So you've got to be ready for that. There will be a sudden 150 200 point fall in the market, in the next couple of days whenever Nifty is going to go up. So keep stop losses very strict and follow the stop losses that we are giving. Now 21,500 becomes a good support area. 22,000 is a resistance area, and if market comes there, that is where some sort of selling pressure might come in. From the stock specific front, almost all stocks went up yesterday, and oil and gas was one sector which did very well. And we have been saying, the PSUs will continue to move up, and some oil and gas PSUs are still looking very good, especially BPCL, HPCL, IOC. Even ONGC Reliance did very well yesterday, so these stocks will do well as well. So, that is one sector to focus on. Also, banks, a lot of shorts built up is there, and likely to see good short covering action. So, watch out for the banking stocks. Most of the banking stocks should do well. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
KEC International has secured orders of 1,300 crores for T&D projects in India, SAARC, and American countries. With these orders, the year-to-date order intake stands at 13,000 crores, so that's positive. On the result side, 3 mutual funds came out with results yesterday. So firstly, the mutual fund industry grew by 4.7% sequentially to 49 lakh 20,000 crores. Among the 3 companies, only Nippon AMC managed to increase market share by 20 basis points. Market share stands at 7.7%. Whereas UTI and Aditya Birla Sun Life have been consistently losing market share. In case of Nippon, its AUM, revenue, and EBITDA all grew by around 7% sequentially. For UTI, AUM and revenue were flat, while EBITDA declined by 5%. And for Aditya Birla, all the metrics were flat quarter on quarter. Hence, we are positive on Nippon AMC and remain negative on UTI and Aditya Birla AMC. Bajaj Finance result is marginally below expectation. Advances grew 35% year on year, while total income grew by 25% year on year due to tepid growth in fee income, which was up 16%. Asset quality was stable. However, management is seeing instances of increased stress in some retail pockets. That is why management has guided that credit cost will increase going forward to around 1.8% levels from current range of, since last couple of years, we have been witnessing credit cost at 1.4 to 1.6% kind of range. So that will inch higher. So that's incrementally negative. That's why we are neutral on Bajaj Finance. Muthoot Microfinance result is okay. AUM came at 11,458 crores. Which is up 39% year on year and 5.4% sequentially. Higher OPEX and higher credit cost resulted in profit before tax declining by 12% sequentially. Asset quality was stable. One would need to watch out for management commentary on the impact of floods in Tamil Nadu, because 25% of the AUM for this company comes from Tamil Nadu. So we are neutral over here. Venus Pipes and Tubes result is in line with expectation. Revenue grew 8% sequentially, 52% year on year. EBITDA margin continued to increase. It came at 18.8% versus September quarter, it was 18%, and last year 13%. Profit also came at 23 crores versus 20 crore in September quarter and 11 crore last year. So performance was decent, and utilization, as it keeps increasing over next 3-4 quarters, we will continue to see, some quarter-on-quarter improvement in revenues and profits. So we remain positive on Venus Pipes. Thank you.
Good morning. Telecom subscriber for the month of November has come in, wherein Bharti Airtel market share has been increased to 32.91% versus month-on-month of 32.85. Even Jio market share has been increased to 39.49 versus month-on-month of 39.3. So this is positive for Airtel and Jio. Thank you.
Good morning. ITC Limited posted the results below expectations. Revenue grew by 1.6% on a YOY basis. If you look at the segment-wise performance, cigarette business revenue grew by 3.6% on a YOY basis, where volume growth has seemed to be declined. FMCG others revenue grew by 7.6% on a YOY basis, which was driven by staples, dairy, beverages, fragrances, and personal wash, home care, and notebooks. The segment EBITDA margin stood at 11%, which was up by 100 basis points on a YOY basis. Agri-business revenue declined by 2.2% on a YOY basis, and agri segment EBIT margin declined by 140 basis points on a YOY basis, which was at 11.1%. Paper and packaging revenue declined by 9.7% on a YOY basis. This was due to low-priced Chinese supplies in the global markets, and there was a muted domestic demand. Also, it has observed a surge in the wood cost and high base. The segment EBIT margin was contracted by 1,210 basis points on a YOY basis to 14.2%. The hotels business revenue increased by 18.2%, and it was a good quarter for the segment, where the segment margin stood at 27.3%, which was up by 680 basis points on a YOY basis. Overall gross margin was declined by 40 basis points. EBIT margin reported at 36.5%. Though the result was below expectations, we are positive on the company given its potential to grow at a healthy rate and its attractive return ratios of over 30%. And also we had recommended this stock in our monthly report in the month of October. And stock has not moved up significantly, and one can still invest as the stock is available at attractive valuation, as it is still trading at 24 times to FY25 EPS. In addition to this, Marico Limited also posted results which were in line with expectations. Revenue degrew by 1.9% on a YOY basis, where the domestic revenue declined by 3.1%, and the volume growth was observed at 2% on a YOY basis. International sales grew by 1.6% on a YOY basis and 6% in constant currency terms. The gross margin expanded by 630 basis points to 51.3%. This was largely owing to moderation in raw material prices and favorable product mix. The EBITDA margin also increased at 21.2%, which was grew by 270 basis points on a YOY basis. If want to highlight some key takeaways from the con call yesterday, the food segment has grown by 18%. In food segment, the management is targeting the revenue at rupees 1,400 to 1,500 crore for FY27. And in international business, it has seen the weak performance largely due to the Bangladesh. It was as it has seen the persistent inflation, and Vietnam delivered 4% CC revenue growth. Whereas Middle East and North America and South Africa has performed well. It expects to deliver high operating margins for FY24, which is expected to be increased by 240 basis points. This was backed by the gross margin improvement of 400 and 500 basis points. Also, the management aims to deliver volume-led growth in the upcoming quarters, and it expects to deliver double-digit profit growth in FY25. Our view is neutral over the near term. The stock is trading at its fair valuation of 41 times to FY25 EPS. Thank you.
Good morning. EPAC Durable Limited IPO is going to list today, and we have recommended neutral rating to the issue. The stock is expected to list at a nominal premium of around 2 to 3% from price of rupees 230 per share. The company functions as an original design manufacturer specializing in room air conditioners. In addition to RACs, the company produces various integral to RAC manufacturing. To diversify its portfolio and capitalize on seasonal RAC demand, EPAC has also ventured into small domestic appliances market. Uh, so the revenue mix of the company is like room AC makes 78% of the total mix, small domestic appliances makes 19% of the mix, and the components makes 3% of the revenue mix. The company proposed to utilize the net proceeds from the fresh issue towards funding its capital expenditure for the expansion purpose and for the repayment of certain outstanding loans of the company. EPAC has already achieved healthy revenue CAGR growth of 26% during FY20 to FY23, with lower ROCE which averaged at 12.3% over the same period. We have observed that most RAC outsourced manufacturing players suffer from low capacity utilization, as RAC demand is low for around half the year, thus pulling down the asset turnover of the business, which actually impacts the ROCE of the company. And we believe that EPAC is being made available at expensive valuation at PE multiple of 69 times of FY23, in contrast to average of 61 times of listed players, and it values at EV by EBITDA of 25 times of FY23 versus average of 21 times of peers for peers. Thus, we have given neutral rating to the issue. Thank you.
Yeah, apart from this, Petronet LNG announced the result, and the result apparently looks very strong, wherein the margin has expanded from 9.2%, 9.7% in the last quarter to 11.6%, and higher even by expectations of around 9.2%. Revenue also came higher than expected at around 14,700 crore versus 12,900 crores. It seems like company has done higher profitability in trading business of LNG, which was the similar case with GAIL also, wherein the trading business has earned a lot of profit, and similar seems like for Petronet LNG as well. Valuations are continue to remain reasonable, so outlook continue to remain positive. Now I'll request commodity team to take it from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold and silver prices to rise, and one can initiate a buy in April contract of gold around 62,350 to 62,300, and maintain a stop loss of 62,50. On upside, we are eyeing for 62,600 to 62,800 on upside. So buying on dips is recommended. Similarly, silver also one can initiate a buy around 72,200 and maintain a stop loss of 71,500. On upside, 73,200, 500 is the target we are eyeing for. All in all, looks positive. So buy and dip strategy should be used. In metal front, copper prices are expected to test 730 and which should hold as a support. So 730 one can initiate a buy and maintain a stop loss of 726.25. On upside again, 736.38 is the target we are eyeing for. Similarly, zinc also one can initiate by around 226.50 and maintain a stop loss of 225. On upside again, 228.50, 230 is the area where one should take profits. In energy front, crude oil, we are expecting some cool off. Prices have rallied and tested 65.30 odd levels. So we are expecting prices to correct till 6,300. So for trading purpose, one can sell around 64.30 and maintain a stop loss of 6,500. On downside 6,300, one can initiate a buy for a pullback also. So maintain a stop loss of 62.40. And in natural gas, prices are expected to consolidate. Prices can support test the support area of 170 to 165. So um, uh, there could be some range bound movement from 165 to 180. So that's it, and that's all from us. Thank you very much.